I would now like to go over with you the depreciation of listed property. Listed property are assets that tend to be used for both business and personal use. The most common listed property is an automobile. In some cases, you may use an automobile for business purposes 70%, but for personal, you use it for 30%. In that case, if the business uses over 50%, you can use the normal depreciation methods discussed in class. If the business usage is less than 50%, you have to use the straight line method. I also want to point out to you that automobiles have limits, and you should refer to exercise or exhibit 1010 in your textbook to understand the limits. The reason they have limits is they want to prevent somebody from writing off a $70,000 Mercedes-Benz for business over a 5-year period. If you exceed the threshold for auto depreciation limits, you can still depreciate the $70,000 Mercedes, but you won't depreciate it over 5 years. It's a longer, as long as you're still using the asset, you can depreciate it to 0, but the actual number of years depreciated would far exceed the 5 years. The other thing I'd like to go over with you is if your business asset, your automobile, is used 50% of the greater than 50% of the time, then you can use the normal depreciation methods. However, if any year before you fully depreciate the asset, the business use goes below 50%, you have to change your depreciation for the year it goes below 50% to the straight line depreciation. And even if the 2 years after you go below the 50%, you would go back to over 50%, you have to consider straight line for the remaining time of the asset's life once it goes below 50%. There's also recapture of previous depreciation when you go less than 50% of business use, and I'll go over that with you after you study recapture in a future chapter. I'd also like to go over alternative minimum tax. Alternative minimum tax I will review with you on the last class, and it is an adjustment that you may have to pay more taxes because your income goes over a certain threshold. For everybody doing their tax return for depreciation, we are using the schedules that we went over in Chapter 10A. And as discussed in class, for the half-year convention, all the assets are depreciated using the double declining balance method, and the percents indicate that. Now, for tax purposes, they do not, for AMT purposes, if you exceed a certain threshold, you are not allowed to take 200% depreciation on your business assets. You're still allowed to depreciate, but AMT has different schedules where you're only allowed to use 150% double declining balance. So we'll go over that in the last class.